I think on that's the scenario. That is a long cycle, and we're only a few years from the top of the previous cycle. And in terms of the what are we doing? There's the great thing about busts is there are always opportunities. And if you look at the small resources, you can get some small resource companies that are trading at discounts to cash. Now, obviously, you've got to make sure what are they going to do with the cash they've got there, how they'll invest it. But how we're playing it is we're looking at some of the companies, the mining services companies, and there's a couple that we've bought in the portfolio. Southern Cross Electrical, I think if you take the cash out, we're paying a 4 or 5 times multiple, and the other one we bought in the portfolio is Macca, a little slightly more expensive, but again, we think the worst is over with some of those mining services plays, particularly the ones that have significant levels of cash, so the opportunity for them to go under.
So it's more cherry-picking balance sheets as opposed to believing in a cycle rebounding.
100%, and where you always make the money is in the whether it was go back up to the 87 crash, the amount of wealth that was made in the companies, like the Wesco, the media companies that had enormous amount of debt but survived. So you get enormous leverage on the equity, and that was the Wescos or in those days the Prime TVs, those media, or after the tech wreck, the likes of the Melbourne ITs or the Reckon, where you're buying their business at a discount to cash. I mean, we tried to do that in the after the GFC when we bought shares in Everest, Babcock and Brown. The fund manager thought, oh well, look, we're buying at a discount to cash. If the business is worth something, then we're going to make a multiple on our money. The unfortunate thing is the business wasn't worth anything. So we made a little bit of money, but that was just coming back to cash. So to me, it's a good time because everyone's turned off that sector to find opportunities. Benny looks as though he's got a couple of stocks.
No, I do. I'm grabbing Matthew's arm. I want to say something. It's not often that I would concur with Geoff on a matter pertaining to stocks. And what I do want to say is that our team have just come back from a visit to WA, and I'm not for 1 second advocating it's time to pile back into mining service companies. I'm not, but I'm suggesting that the folder stay open. And we came back with some reasonable encouragement, I must say. We were last owners of mining service stocks back in mid-2012. And we came back, and what we observed from the number of the companies we met was very reassuring. And I, like Geoff, are not calling for the next commodity boom. It's been 8 years since commodity markets actually sold off properly and bottomed as a collection. But I think what we have seen are mining service companies resetting their businesses, whether it's purging management teams, whether it's reducing operating expenses of the businesses, getting balance sheets right, divesting businesses that don't work any longer. It's business, so resetting businesses. It's also diversification that mining service companies have been engaged in as well, moving from the west coast to the east coast and getting involved in infrastructure works. It's commodity markets not so much coming alive, but the Australian dollar falling and breathing life back into a number of the Australian mining operations. And the final point I make, which is important for everyone in this room, is that the Australian equities market is back open. It's back open for business. The function of being able to raise fresh equity is actually happening right now. Today, Sundance Energy raised, looks like they've got away with raising $80 million. 2 to 3 months ago, that was unthinkable. We've seen a number of lithium companies, promising lithium startup businesses, and more than startups, they're about to push the production button in some cases, have raised hundreds of millions of dollars to promote new business projects. The point is, it's with us.
I'm going to ask you at the end about the overall market. So
Sorry,
get to that. No, that's all right.
I just had to, when Geoff lines up with me,
it
doesn't happen often.
We can, Crispin, because we've got to do about 10 minutes of questions.
Yeah, just very quickly on the resource sector. I mean, people talk about the long cycle, but resource as a percentage of the overall market peaked at 40% about 2 or 3 years ago. That's now 15%. So the markets are very efficient in terms of pricing the future. So I think a lot of that long cycle is in the price of resources. But the outlook for resources comes down to one key call. If you believe that China is sort of going to muddle along and steel output is sort of broadly flat from here, then there's some opportunities in the resource sector. I think overall it's probably not a standout, but some opportunities. If you believe that China has got another leg down because the issue of bad debts is going to materialise and start hitting a lot of these heavy industries, then we'll get another wave of problems in the whole resource sector. So that's the key call you've got to make.